Morning, everyone. You're very welcome to our Lightning Talks session, our first breakout of the day. I'm Nicola Anderson. I'm the Chief Exec at Fintech Scotland, and it's my absolute pleasure to sit up here in really esteemed company as we have 4 fintech innovators, all fintechs within the Fintech Scotland community, who are going to talk to us about living and breathing the opportunity that fintech presents. I'll allow them to introduce themselves as they all stand up, but we have businesses here, Exizent, Nude, Inicio AI, and Levelly, all driving change in the fintech landscape and really thinking about good customer outcomes and how we use tech, coupled with finance, to drive that change. So we're going to spend the morning hearing from them. They're each going to talk a little bit about what they're doing and their business. And then we'll have 5 minutes each or so to do that, which will leave us around 15 minutes for questions. So as you hear what they have to say, please think about the questions that you'd like to ask them, and then we will get right into that Q&A at the end. So without further ado, I am delighted to welcome our first speaker, Nick Cousins. Nick's the founder and CEO of Exizent. And as we can see, the bereavement journey is Nick's focus. So Nick, over to you.
Brilliant, thank you, Nicola. Good morning still, everyone. So yes, I am Nick. I am CEO and co-founder of Exizent. Some of you might have heard of us already, but if you haven't, we are a bereavement technology company focused on one thing, and that is to improve the bereavement experience for everyone involved. I'm here to talk to you today about something slightly different but connected, and that really is the link between how financial services companies deal with bereavement, how they treat bereaved people, and the ever-growing scale of generational wealth transfer. So, what is it? Well, I'm going to start with a definition just to get us all on the same page. So generational or intergenerational wealth transfer is a phrase that you hear a lot about today in the financial services sector. But simply put, it is the point where assets are transferred from, or sometimes liabilities indeed, from one generation of a family to the next, right? And this can happen in life, so as gifting, or more commonly, it happens at the point of death, where money is handed on to the next generation in the form of an inheritance, right? Every single financial services firm in the UK has to deal with it, and this really is a point where, for those firms, the point of bereavement really is a moment where asset can ultimately leave your business, right? That kind of makes sense. So why do we care about generational wealth transfer? Well, it is becoming a much, much bigger deal than it has ever been before. So to put this into some context, over the next 30 years, which is a long time, but 30 years, it's estimated that £5.5 trillion of assets will be handed from one generation to the next globally. In the UK, what does that look like? Well, in the next 10 years, it's estimated that somewhere north of £300 billion of asset will be handed down. Why is that such a big number? Well, this is really the wealth that has been accumulated by the generation we know as the baby boomers, right? That generation that for the last 30 years has accumulated a lot of money, and that the financial services sector has done a pretty successful job of managing all that money through that period of time. 80% of the wealth in the UK is held by people aged 45 over, right? So that's a big number. Every day now, that money, that asset, is being sold out, it's being passed on, cashed out to the next generation, as the baby boomer generation begins to unfortunately die off, okay? There is very little that has been done to link the generations, the baby boomer generation to our generation and the generations after. And that means that actually it's very likely that those people are not your customer, they have no affinity to you, and what they're going to do with that asset is completely unknown, okay? So from our perspective, bereavement becomes a really critical initial interaction point with the next generation and an opportunity to make a good impression, right? However, unfortunately, across the landscape as a whole, I guess the experience of bereavement for most people when dealing with the financial services sector is not a particularly good one. Consumer duty, vulnerable customer regulation, all points to bereavement as being a really key moment that you need to take care and attention over. But we do an annual bereavement index, which we're actually just publishing today, coincidentally, for this year. And it highlights some rather challenging insight into what a bereaved person encounters when they go and deal with the range of financial services organizations out there. 78% of people, right, who deal with bereavement are now under 45 years old. So the burden of estate administration is being placed on a much younger generation. That generation is, as we know, digitally enabled. They have much, much, much higher expectations of digital servicing, of responsiveness, of transparency. 62% say the whole process takes longer than we expected it to do, because we have a different expectation now of how long things should take. So there's an immediate dissatisfaction in the process that you go through. What I get most worried about is like 28% of people, over a quarter of people, cite financial difficulties going through the bereavement process, right? They're struggling to pay off debts in the estate, they're struggling to pay off inheritance tax because it takes time to liquidate assets and get things moving. It just is a long process. And the most commonly cited cause of concern and frustration for people is the delays that they encounter when dealing with financial institutions, right? So that's a kind of bit of a slight on the overall landscape of financial institutions. What do we take from that? Well, there's two key things that are almost certainly true. Number one is a bad experience means that you are very, very unlikely to retain any assets associated with an estate on your platform. The second thing is it's highly likely that that bad experience will be shared between family and friends and everyone else associated with that unfortunate event. So you have this definite negative ripple of sentiment that goes off the back of this. Okay, so it's really imperative that we sort of think about this as a key moment that you need to do better at. So the good news, however, is that actually, if you get it right, there is an opportunity to make a good impression, right? So this is a quote, or a quote from Trustpilot. This is a real quote that really highlights, I guess, the outcomes that should be possible if people took more time and attention, created good, supportive bereavement journeys for people. So this is someone who had a good experience with a building society, actually. At the end of that experience, they decided to put their inheritance with that building society in the form of various things. I will stress this is a single positive comment out of an overwhelming sea of negativity on public forums that talk about how firms engage. So this is reputation at stake, right? This is your reputation as businesses if you're in a financial services organization. So the good news is it is possible to do things better. And if you do things better, the outcomes are generally good for everyone, right? So I'll leave you with this one thought. Getting customers and building asset as a financial services organization is really hard. I spent 20 years working in banking. I know how difficult it is to grow a book of business. So I would like to leave you with the thought that actually you should be thinking about bereavement as a time when you get the opportunity to create a good impression, do a really good job, and frankly increase the chances that you might gain a customer and indeed retain asset on platform. That's really what we are here to help you try and do, and that's the outcome we think should be achievable for everybody. So there you go. So that's the phrase intergenerational wealth transfer is an awful financial services phrase, but it's out there. That's probably what it means, and that's really the link that we see between that big emerging issue for the financial services sector and the importance of doing a really, really good job handling bereavement requests that come into your organization.
Thank you.
Okay, thank you very much.
Thank you. Absolutely fantastic. Really, as we think about purposeful intent, and I'm sure there are many questions out there as we move into that question session later on. But for now, I'm delighted to ask Kate McKay, the General Counsel at Nude, to come and talk to us a little bit more about that open banking in action and how that can support savers. Kate.
Thank you, Nicola, and hi everyone. Good morning. as Nicola says, I'm going to talk to you a little bit about how Nude is using open banking to help our customers with saving. And before I do that, just to sort of set the scene for you, for anyone who doesn't know what Nude is and what Nude does, our vision at Nude is to help people achieve their goals in life by making it fairer, easier, and more transparent. That's a lofty goal, that's a big goal, so we've broken it down and we're starting off on our current mission, which is to help first-time buyers. We talk very specifically about helping people with their goals in life rather than their financial goals in life, because the audience that we talk to, which is a younger audience, we believe need to stay focused on the goal, which is currently what we're working on is owning a home, rather than the product or service that will get them to that end goal. So how do we help our customers achieve their goal of home ownership? Well, we offer our services via an app. When a customer lands within the Nude app, they are invited to set up their goal, their financial goal, the amount that they need to save. We guide them through that process of understanding where they want to live, what type of house they want to buy or flat they want to buy, and we give them some guidelines about how much that house may cost them to buy based on current house prices, and how much of a deposit, stamp duty, LBTT, etc. they might need to save. We then, and that becomes the focus within the app for them. We then give them, and this is really critical, key part of Nude, we give them an indication of time, and again, I'm talking about our audience here, our customer base is young people, and we think time is really important to them, and understanding how long it's going to take them to get there. This is a key tool for us. We give them an indication of how long it will take them to save their deposit amount, or the amount they need to save to buy their home. And from there, what we can do is help them understand how they can knock time off that goal, and this is a really effective method for us in terms of helping our customers. So we can help them. The third image there you can see is the ideas that we can give to customers about how they might save more money. Once they've saved the money, we offer them the financial product that we offer is a lifetime ISA, so saving or investment ISA, so they can put the money in there and they can start to see the time coming down. But these ideas in the final slide that you can see, we don't just come up with suggestions like make a packed lunch or suggest a tedious parent that's giving you ideas. They're personalized insights based on those customers' own personal transactions. And this is where the open banking piece comes in, because we can only do that because our customers consent to us accessing their transactions, the bank account transactions, so we can understand what their spending is like and give them these insights into their spending. So it's about giving them insights into what their spending is, holding a mirror up to say, this is what your spending looks like, and you make of that what you will. It's about coming up with ideas for them about how they can save. These are just some of the examples that we have up here. And you can see that with each of these, we're not just giving them the idea that if you go on one fewer night out a month, you're going to save £50 per month. We're telling them in terms of time, how much time that will save them on saving their overall goal. And that's the bit that we find really effective. And as I say, these are all personalised, and they're only possible because of the open banking connection that we have and access to their transaction data. A new feature that we're working on that will really push this to the next level is around sort of AI and the ability to use behavioural insights and data science to bring the insights and ideas that we can give to our customers to the next level. We're really excited about what we're working on there. And I suppose the other element of open banking that we use that really has a big effect on our customers is around payment. So we offer that financial product that I talked about, a lifetime ISA, and we need to get money into that account. And a lot of what we do at Nude is around, as I've talked about, behavioural science. And so we believed at the outset that having a direct debit and committing to a monthly saving amount was really important behaviour for our savers. So we offered a direct debit. But actually we know that in order to provide the flexibility that our our audience require. We needed to be able to provide one-off payments, and these come off the back of, for example, the ideas that we have on this page. If someone has managed to go on one fewer night out a month, we can see that through their transactions, through open banking, and we can suggest to them, hey, you've actually managed to do that, well done. Would you like to put that aside into your Nude account? And they can, because of open banking payments. So we use a PSP provider to provide one-off payments, and that fits, that type of payment is so smooth, efficient, and transparent that it really, really works well for us in terms of our customer demographic and what they're expecting from an app like this. It's instant gratification, they trust it, and it's quick. So I suppose those are the areas of open banking that I really wanted to draw out in terms of what Nude is doing. There are, I suppose, within that, there are interesting areas of challenge that we've had to work with. Data enrichment is a real challenge, because if anyone has interacted with the data that you do get through the open banking areas, often that data needs a lot of work before it's usable. So we've had to do a lot of work around that. And I think the other key part that deserves mention is around trust. So I'm talking about these customers granting us access to their financial transactions, and I think that we've had really good success in that, and I think that's partly down to the audience that we're speaking to. It is a younger generation that are more open to the concept of opening up their bank account transactions with an unknown faceless app, but there's still a challenge around trust, and we really recognise that we have to build the customer's trust in order to have the relationship that we have with them, and we really want to maintain it as well. So a lot of work has gone into the way we interact with the consumer and build that trust is around the journey that they have within the app. So we've had to put a lot of work into that as well. And I think the final slide here is just a good example of some of the trust that we've built up and how enthused some of the customers are. And I think this all goes back to the relationship that we have with them and the relationship that they have with Nude, the app, as well. And that's all comes back to the open banking, I think, as well, and how transformative that is for them in terms of their savings journey. So yeah,
great.
Thank you.
Thank you. We're certainly getting that really intentional, purposeful focus as we think about fintech innovation already. And now we're going to move even more into that as we hear from Rachel Curtis, the CEO and founder of Inicio AI. And Rachel's going to talk to us about AI, indeed, and how it can support customers. Rachel, over to you.
Thank you. I think it's still good morning, just. I'm going to share how we're using conversational AI and also some of our experiences and challenges in sort of the fintech space. My background's 30 years in financial services, and I still sit as a non-exec director at a building society, which is 150 years old, where I'm also the Consumer Duty Board champion. That's a very different world to my job, trying to lead a fintech AI startup. But hopefully it helps me try and understand how we bridge those two worlds together. Now, AI. I'm starting to wonder if the first rule about AI is not to talk about AI. It's an increasingly controversial topic, particularly in financial services. There's lots of different types of AI, and there's a hell of a lot of confusion on the subject. With regards to conversational AI specifically, the historic challenge for us has always been that people were really frustrated with chatbots. We all know how quickly they fall over, and thinking that this is just another version of that. Then there was this really lovely 3-week period where ChatGPT first came out, and everybody saw it and thought how cool it was, how amazing the things it could do, and that was a really lovely 3 weeks. Then we started to see the problems with it, where it would go wrong, and some of the real dangers. Countries started banning ChatGPT, and it all got a bit scary again and harder again on that world. So I wanted to explain that we're not ChatGPT, we're not using ChatGPT, we're not doing it in the same way. It's a very safe application without some of the consumer risks that you've been hearing about, and that means there are ways to do it safely, and I'll hopefully show you one. So we use that conversational AI to solve a problem that exists at both the business end and the consumer perspective. we've created a virtual agent that guides a customer through a really detailed affordability assessment that logs down all of their income and all of their expenditure. There's lots of use cases for that, as you can imagine, so new lending, wealth management, property tenant onboarding, but actually we've started in the debt space and for very obvious reasons. Cost of living crisis is obviously increasing the number of people that are struggling financially, and for those that are in debt, there's a really, really critical first step. That is to understand the position they're in, because they've probably got into debt because they didn't really understand that very well. To do that, a lot of people need some help, and they typically have to get that from an advisor at the company they owe money to, and that's a huge barrier. They basically feel embarrassed, they don't want to speak to an agent, and they just get stuck. And the serious consequences of that, 1 in 8 of those that are behind on a household bill are now attempting suicide because they feel so stuck in that situation. It's also a huge problem for the organisations and their own staff. Where the customer does speak to an agent, that agent is forced to do a very repetitive, very emotional, very tough job, and agent attrition in this space is the highest that we see. So our virtual agent guides the customer through self-serving to do that income and expenditure assessment. That means they turn up, if they have to speak to an advisor at all, and some of them can completely do the end-to-end journey all by themselves. But if they do need to speak to an advisor, they arrive with the full picture ready to go. So that advisor can focus on what they need to do to help them and take the next steps, rather than spending half an hour to an hour going through trying to fill that assessment in the first place. So just to bring it to life a little bit, our avatar that helps them is called Budgie, and here's some examples of what she can do. So these are things customers have told Budgie, and she works out how to fill the form in for them. This one is a bit more complex, so my gas is 60, I get 10% discount, stick a tenner for water, and she can work all that out for them without them having to do anything. My personal favourite, and those that have heard me speak before will have heard this one, a customer actually told Budgie they spent a pony on fags. I didn't know what a pony was. Somebody this morning has asked me about that as well. And she put £25 against their smoking products. Interestingly, if you tell Budgie I spend £50 on food for my pony, that goes into pet food. So she really gets the understanding of the context of the word. Budgie can also identify additional benefits. So during the process, we're getting a lot of information. She can tell them if they could claim additional benefits, and that creates a real positive in what can be a negative situation, and help them get out of debt in the first place. We also use APIs, and we can pre-populate and validate the information, and that's why we've just been accepted onto the FCA innovation pathway, because they're really trying to solve the problem in this space of getting good consumer outcomes around getting really good quality detailed income and expenditure forms. And it's working, I'm pleased to say. So our first client launches, we're seeing a 30 to 40% increase in engagement and 87% completion rate of the form, which I had to keep checking the numbers because they're quite good. So that's our use case of conversational AI. In terms of some of our experiences, one of the huge challenges for us has been how do large organisations safely consume small fintechs? And we've already heard about this morning. We've managed to solve that in our case by partnering. So we partner with WaveNet, they're call centre and cyber security specialists, and they're really used to dealing with massive organisations. So they put the phone system into the DVLA, for example, and that's just been voted as Britain's most improved public sector organisation. So that means that I can keep my team small, agile, focused purely on the technology, while WaveNet deal with those relationships for us. And that's one way that we've sort of started to solve that, what we've been hearing about this morning, of bridging that gap. Just to finish, I was going to talk about where I think this technology is going and where some of the viable use cases are right now in terms of using conversational AI to support customers. And I do think it's a really exciting space, but it is really complex and it's very new. And I think it's really important we don't try and run before we can walk. So first one, I think, is you can keep it really simple and really broad. So book an appointment, handle basic queries. Basically, if you could train a school leaver to answer the phone to do those tasks, I think you're pretty safe with conversational AI to start with. Risk is it may not know when to ask for help like a school leaver might, but it will always ask for help at the same point in the same journey, so you get more consistency. So there's upsides and things to watch for. The other one is really going really narrow on a topic and very deep. That's our use case. We only do the income and expenditure form, so it's a very narrow topic, but we've got loads of utterances just in that space, so it works really well. You still need to sort of think carefully about your guardrails, so how do you limit the consequences? We use supervised learning rather than letting it teach itself to make mistakes. We don't give any financial advice yet. We'll get there, but it's not a thing for us to start with today. And my final thought, and I think we've already touched on this morning, is about how do we build trust in this technology. So when we see customers speak to Budgie initially, they shout at her or speak in pidgin English, like they're trying to get Alexa to do something. And they're starting to learn as they're using her more that they can just talk to her normally in any accent and it works. Also, agents need to build trust as well. So we have watched some agents get a Budgie completed income and expenditure form and want to check things with the customer again because they've not seen that happen themselves. In time, they start to trust it and they'll use it more readily. So that's something for us to think about as well. So hopefully that shares some thoughts on conversational AI in customer service.
Amazing. So certainly we're definitely getting that courage of conviction really important as we think about purposeful change that we can drive through technology and innovation. We're going to finish our lightning talks with Sonia, the CEO and founder of Level E. And Sonia actually is going to talk about how AI is impacting investing. Thank you, Sonia. Over to you.
Thank you. Can everybody hear me? Okay, thank you very much. It's a pleasure being here today with you, and good morning. And let me just get this. So I am going to, this session, talk about the trends shaping the future, and especially on AI-powered impact investing. For the application of AI to investment management, to see it as an emerging trend, we believe that it should address 3 key objectives. So one is performance, very important, operational efficiencies, and cost reduction. So in terms of performance, this is about generating alpha or outperformance relative to a benchmark. And this is about using AI and machine learning to enhance the analysis of large and diverse data sets. And when doing so, we are trying to find new insights and investment opportunities. We need to find predictive models that are very strong and capable of doing a good job. With this, we would be launching and operating investment strategies that are best suited to different trading styles and also changing market behavior. This is very important because we want systems that are able to adapt in a systematic way and also being independent from human input. Continuous adaptation is about better coping better when emerging market conditions arise, which is happening all the time in financial markets. And we see that there are many fintechs attempting this, and also over the past few years. However, learning from structured and non-structured data is very challenging due to the nature of financial markets. So our first objective was to conduct a test of humans versus robots. So this lasted 7 years. This period lasted 7 years. And what we did was running in a fully regulated European fund, offering daily liquidity. We ran a fully automated fund called the Maya fund over a period of 7 years. And then we compare that against peer group funds of the same style within the multi-asset, low volatility style. And we can see on the blue line that the fully autonomous fund has performed better than other multi-billion asset management funds. So after this, looking at in parallel to this objective, we also wanted to assess whether it is possible to improve operational efficiencies. With this, we mean effective management oversight, compliance, regulatory reporting, so the whole lot of compliance and regulation that has been increasingly becoming more complex, and effective risk management at the same time. So trying to get efficiencies across the order placement, order management, compliance, execution risk, and reporting, and also real-time analytics. So the third objective was also to assess if it was possible to reduce costs. we know that AI can disrupt traditional business models, and would we have a significant reduction of costs due to the economies of scale and scope that can be achieved through AI and machine learning? And more importantly, these benefits would then be passed on to the end investor, who pays way too much in fees currently. So we can see on average fund fees across a range of funds could be 75 basis points, so 0.75%. And we can see with autonomous investing, we can reduce this by 50%. So why AI is important? In terms of operational efficiency, we can see that at the moment we have an unsustainable business model in traditional asset management because the cost-income ratio is way too high. It's on average above 80%. That costs you of getting that income in terms of your costs, and we see thousands of people in terms of headcount with these large multi-billion asset managers. So we need to start transitioning because these models are people-based. They are also built over using several different software systems that they need to be integrated by humans. And we can see that we can reduce with a platform on a technology and data-driven and AI-based type of firm, we can reduce that below 40%, the cost-income ratio. So these benefits cannot be realized unless we actually, investors can trust these AI systems, explaining how they govern their decisions. So with this, the fourth and fifth objectives was to bring explainable AI, XAI, and sustainability, all of the ESG factors, into the equation, and to be able to integrate this in a single technology that will be transparent to all of the stakeholders. So this is critical. Implementing it in this holistic manner creates definitely the potential for a very different business model and investment strategies and economies of scale. So with this, my last picture is, this is how the architecture and the design of this system for fully autonomous investing looks like. So you have in the center the autonomous impact investing, which is data-driven and is basically feeding in real time all of the different areas of the investment management process. So we have order management system, we have the AI signal engine producing signals and opportunities, execution management system, portfolio management system, risk, reporting, mobile application with real-time information, data lab for research, and all of this being explainable for AI firms, for asset managers, and more importantly, for AI regulators and other public bodies. So thank you very much for your time this morning.
Thank you, Sonia.
Thank you.
My goodness, lightning talks indeed. We could have easily listened to each of those presenters and their businesses and what they're doing for much longer. I have one question that I'm going to ask everybody, which is if actually there was one thing that you would like to see now that would help evolve your business and the proposition that you have, what would it be? So you can think on that question. But are there any questions from the floor that would like to? Oh, we have one up here. Thank you.
Christina Fulaki from the Scottish Financial Enterprise. Just a question for the last one around impact investing, which is extremely interesting, and it was fascinating to look at that, so thank you. When it comes to the social impact, because I appreciate that when it comes to the environmental impact, we've started to have kind of this narrative of some things that can be measured, and it's not completely novel to try and do that. Do you think, how realistic do you think that it is to have kind of the social impact data factored into these kind of data models so that you're not just looking at the carbon footprint of something, but the gender equality impact of a fund that, you know, say goes quite well for a few years, but might be damaging the communities around it?
Thank you.
So is this to do with the integration of data into the investment process? So yes, so it is a very important step. It's a critical step. to have models that are able to understand this data in several different formats, unstructured and structured data, and to be able to analyze this, because we're talking about terabytes of data. Human beings, we just can't. Portfolio management teams, when a portfolio manager might learn and might be very experienced in a particular sector or in several companies, such as 5 to 10, but it is impossible for a strategy then to grow and to scale horizontally across other regions. If it's a UK strategy, can you scale that to a US strategy? The humans are not going to be able to scale that in that manner. And also vertically, you need the intelligence from the models that understand the execution strategies, market impact, because they are analyzing millions of trades happening in the world. So in my view, this is the essence, data. It has to be a data-centric approach. But the challenge currently is that asset managers are not ready with the infrastructure, the data infrastructure for the machine learning era that is coming. So you just need that infrastructure to feed the models, and then obviously that's another very long story about the development of the AI models.
Thank you, Sonia. I'm getting that's it. Stop saying thank you, Ray. But I did have one question I've offered to our panel. So what one thing is going to make a difference, Nick?
I think you probably talked about a lot this morning, which is the recognition that there are lots of great firms out there willing to work with big financial organizations with great SaaS products that can be deployed quickly, but we've got to embrace that environment, right? That ecosystem of partnership.
Thank you. Kate, what's your view?
I would agree with what Nick said, and also build on that moving towards, as I talked about, open banking has really helped us. The more open, that ethos of openness across fintech and innovation, more of that, I would say.
Thank you. Rachel?
Apart from more hours in the day, which I don't think you do, investment and how you help big organisations and small fintechs meet in the middle somehow.
Great. We're all about that. And Sonia, what's your perspective?
Support, yes, financial support. I think Scotland is very good with grants, research grants, and investment, private and public. I would just say that embrace technology. Do not feel threatened by it. AI is here and is here to stay, and machine learning is getting very, very complex, and we have it everywhere. So if we don't feel threatened by it, but instead embrace it, that will open up the possibilities for many of the fintechs growing their businesses.
Thank you.
And,
Thank you so much, Sonia. I think you can be confident listening to our fintech innovators here in Scotland that they're focused on the future and they're focused on the opportunity that technology and data and trust with the customer view can present as we take the financial services sector forward. So please join me in thanking them for building that trust and building that future.